the stock market seemingly hitting new highs on an almost daily basis, as we forget about the overblown worries that held us back over the summer. Not everyone's a winner. The price of gold has fallen from over $1,550 in early September to $1,462 today because gold thrives in times of economic uncertainty, and things seem a little less certain today, although, as you know from the top, there's plenty to worry about. I think the pullback, though, makes sense. As the averages go higher, so does the need to own some gold as a kind of insurance policy against anything going wrong. And that's why I like Agnico Eagle Mines. That's a well-run gold miner that operates in relatively safe locations. Canada, Finland, northern Mexico, making it a low-risk producer. Not necessarily lowest cost, but low risk. When the market was getting clobbered earlier in the year, the stock soared to the point where it's still up 44% for 2019, even as it's pulled back 10% from its late August highs. So let's check in with the bankable Sean Boyd, the vice chairman and CEO of Agnico Eagle Mines, to get a better sense of how his company's doing and where it's headed. Mr. Boyd, welcome back to Mad Money.
Nice to be here, Jim.
Okay, Sean, you're a no-nonsense guy. You're really rather amazing. Revenue growth up 30%. Strong top and bottom line beat when you reported at the end of last month. What is making this happen? Because I know you spent a lot of money getting this thing right, and it's all coming to fruition now.
Yeah, we made some major investments in the pipeline, even during times when the gold price was much lower than it is today. So our timing was perfect, and we're now starting to see the benefits of that. We can see steady growth in production over the next several years as we begin to ramp up the new mines that came into production this year in Nunavut.
Some of the costs of these mines are rather extraordinarily low, given gold at $1,400. Can you tell me about this LaRonde and LaRonde Zone 5? I mean, you got LaRonde's down is $454. How's that possible?
Well, LaRonde's been producing since 1988. And it just so happens we're mining actually 3 kilometers below surface. The best grades in the history of that deposit are actually at 3 kilometers and below. So we're starting to see the benefits of opening up that new area, giving us access to that higher grade material. That lowers our unit costs at LaRonde. So that's some of the lowest costs we've seen in 30 years there.
Is that unusual?
It's unusual, but it's a large system. This deposit has zinc, it has silver, it has copper. It's what's known as a polymetallic deposit. These tend to be fairly big. There's still 10 plus years of mine life there, and we're still finding more. We could go deeper. We're planning actually to go to 3.5 kilometers below surface.
We'd like to go down there with you. I'm looking at my executive producer. Would you ever let us go down?
Yep, might as well do a show there at some point. Why don't we go next year?
I would love to. Now, you spent $397 million on Amaruq, a fantastic gold mine. Why does it cost so much money to do a gold mine?
Well, that mine is in Nunavut. There's literally no infrastructure. We had to build the roads. We're actually the largest land or road owner in Nunavut. We have over 200 kilometers of roads. So you're putting in roads. You're building power facilities, you're bringing equipment. It's expensive, but the good thing about that is we're able to leverage off an existing processing facility. We simply just truck the ore down the road. So that kept the capital down, and we can see a lot of production coming out of that. That's a big part of our growth going forward.
When you truck like that, is that something you can do autonomously?
Ultimately, you can. Right now, given the technology, we're still using 150-ton haul trucks with a driver. But ultimately, we hope to do that autonomously.
On this project, I think people have to understand that it's not just like you turn things on. There's always something when I do the gold stocks, and I happen to, I love the gold stocks, where there's a new thing that goes wrong. Dewatering?
There's a lot of water. There's a lot of lakes there. And it was just a matter of getting that mine up and running and starting it at the same time we had the spring thaw. It's actually not spring, it's June. And we had excessive rain during that period. So it's simply pumping out the area that we're going to build the open pit. So that's done now. And now we're just ramping up the mining rate.
All right, you must have great confidence because you're such a conservative person, yet you gave us a pretty big boost in the dividend for your company historically.
Well, we love to pay a dividend. We paid one for 36 years, which is not easy to do in the gold mining space. So we're proud of that track record. And the way we've positioned it, clearly it depends on the gold price, but we're certainly positioned to hopefully do better than the current level of 70 cents per share.
All right, so Sean, are you able to turn it off and turn it on. For instance, Meadowbank. Here you got total cash costs of over $1,000. Now, that seems dicey to me with gold at $1,400. But as long as you've got a $40 margin, just keep it open?
Well, that one is just the processing facility. So we've just finished mining out the deposits that are close to the Meadowbank processing facility. Amaruq essentially gets shipped in to the Meadowbank processing facility. So it's just a transition from the deposits near Meadowbank to now the Amaruq deposit. So in the last few months of that mine, costs are a bit higher.
Now, Sean, a lot of the gold miners are really challenged to find gold. Some of them have to make kind of difficult acquisitions, mergers, because they're running out of gold. Is it fair to say that in your many years in the business, that this is about the hardest yet to find good quality gold in safe areas?
Absolutely, and I think that bolsters the case for gold going forward. Still very strong demand coming out of central banks, coming out of regions like China and India. It's getting much tougher to grow reserves. It's getting much tougher to grow production. Not just grow production, but grow it in a way that actually improves the underlying quality of the business. It's a lot tougher now than it was 10 or 15 years ago. We just celebrated today our 25th anniversary on the New York Stock Exchange. A lot tougher back in 1994 than it is today. And I think that bodes well for, even if gold's at 2,000, we're not going to see a substantial amount of new mine supply because it's just so difficult.
One last question. I know that gold mining is often uses chemicals that countries don't like, that neighboring residents don't like. Is it become ecologically more tough to dig for gold than ever before?
It is, but that's more just going through the process of meeting all of the environmental regulations, but mostly permitting. So that's another thing which limits supply. The lead time to build these assets are a lot longer. The capital required to build them a lot larger. That just makes it more difficult. But these deposits that are being found now, the new ones, are in parts of the world which lack infrastructure, are in parts of the world which countries may not want you there. So that's why it's also getting more challenging to find deposits. That's why we love Nunavut. It's a place where the locals want mining, and there's unlimited potential because there's not many people there. And that's an area, as we said before, it's 3.5 times the size of France. We're the largest player there, the largest owner of land, and the biggest producer. So we think there's a big future there.
Well, look, congratulations on your 25 years on the big board and also on that remarkable quarter. Good to see you, sir.
Thank you very much, Jim.
Okay, that's Sean Boyd, the CEO and Vice Chairman of Agnico Eagle Mines. If you are worried, if you are concerned about the world, you can go into cash, you can go into a cave, or you can buy Agnico Eagle Mines. Mad Money's back after the break.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.